How's it going, fellow traders? It's Magic Trader here, and this is the CFTC data that was recorded on November 17th, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. And so let's start by taking a look at gold. Alright, what do we have here? Okay, so big drop in gold on the weekly chart. And as that took place, we see that there was an increase in longs from 318 to 329, and they just slightly reduced their short positions. So we're not seeing much in terms of any big moves. Still the same, adding to longs, closing shorts, adding short, closing longs. It's just a bunch of randomness, okay? But again, remember, we went from massively aggressive with longs to neutral. Okay, so this is not the time to be getting in any position on gold. When the institutions are neutral with their position, it's not a good time to get into a position because there's no momentum on any direction. So we have to pass. Alright, now we have oil. What do we see? An increase in longs from 633 to 638, and then another big reduction in shorts. Remember, back November 3rd, we had 196,000 shorts. That was after this drop. They closed off their shorts now, and now they're adding long, and now we're seeing a big push up right back into that weekly supply. Now remember, we've been talking about how there's a very good chance we see a rally up in price like that, and so far this is what is starting to unfold. Now we look at the dollar. Dollar, an increase in longs from 18 to 19, and then an increase in shorts from 19 to 20. Not much here. On the weekly chart, price was consolidating, so we're not really seeing much in terms of direction. What we can see is that they were bullish back here in early May, then they became bearish, and now we're seeing somewhat of a neutral tone to the dollar. And that's good because that does reflect where price currently is down at these lows. Okay, so again, no momentum. We shouldn't be trading this pair when there's no momentum. Next we got the Aussie, and we see that there is a slight decline from 49 to 48, and also a decline in shorts, and that came as price was consolidating right here at the weekly area of supply. They were bearish, less bearish, more neutral. Okay, look at the positions. Bearish, less so, bullish, and a little bit of bearish again. So they're back and forth, back and forth. Again, there's no clear direction based on the positions of where the institutions are going to take this at this time. Then we have the US CAD. They closed off longs, and they added a little bit to their shorts. That was as price was consolidating here at these lows. Failed to break and close below the previous lows there, which is a very weak sign for a continued move lower. So we are expecting more upside to come. US Swiss franc, not much here. Longs have been cooled off for a long time. Shorts have been the more aggressive position. They closed off some of their shorts from 21 to 19 as price was rallying up. Okay, so again, no strong signs of what is going to take place. All we do know is that they are remaining bearish at these lows. Alright, and now we got the euro, and we see that they added some to their longs, and then they added a little bit more to their shorts. So much so that it got just a little bit aggressive. Okay, the coloration turning a little bit more red, which is a good sign. Good sign for that continued move lower after the consolidation. Alright, this is what we've been expecting. Unable to pass through, we'll likely see a drop in price. Next we see the pound. Longs have been cooled off for the last few weeks. We're starting to see more aggressiveness with shorts, which is a good sign. Is that what we're not seeing with the euro? Right? Potential for a drop. That came as price was consolidating. So far this is starting to show evidence that this may turn over shortly and see price start to decline. US dollar, Japanese yen, they closed off some more longs, 22, 13, now 10, and they also closed off some of their shorts from 55 to 40 as price was rallying. So they closed off shorts as price was rallying. So the closure of the shorts is what caused the rally up in price. Okay, closing shorts at demand. So we might get a slight push up, but over the long term we are still expecting more downside. And Kiwi, we have a big push up in long positions, and we were expecting this because we didn't have supply right here like we did on the Aussie, so there was nothing to keep price down. So as price was rallying up, they increased their longs from 25 to 29,000. They also increased shorts. Why? Because I think there's a good chance that we're going to see this tip over and start to head down. The last thing I will point out to you is that if you look at the positions, we can see that they were very bearish over here and then became more neutral and continued to be neutral. Okay, neutral even though net positions are positive. So remember that. Okay, not a good time to trade this because we could see price tip over like that. Alright, ladies and gents, so that is your CFTC report for the data recorded November 17. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks. Have yourself a great week. Take care.